Okay. Uh, can everybody see my screen at this time?
Yes, Mark, I
Okay.
see it.
You see it? Okay, good. Good. We also have a pre-test and a post-test. If you've had a chance to be able to do the pre-test, we'd like for y'all to be able to do that at this time. We will also have a second webinar on the 24th, which will be part 2, which we'll get into a little bit a deeper discussion. So with everything going on, thank you and good morning, everyone. Our agenda for today will be talking about internal control. We'll talk about the difference between Green Book, Yellow Book, and Red Book. We'll try to define internal control. And we'll also talk about how internal control has been changed through the new 2 CFR. And finally, we'll actually talk about some components within the Green Book, specifically more on the categories of objectives. And then we'll also talk a little bit about components of internal control and principles and attributes. Most of that will be done in the second part, where we'll go in deeper about components of internal control and principal attributes. Our acronyms for today naturally would be the Code of Federal Regulations. Committee of Sponsor Organizations, the COSO, is one of the guiding forces for internal control, both for the private sector, the corporations, and the public sector for grants and everything. We also have GAGAS, which is Generally Accepted Government Auditing Standards, which are used by the Yellow Book, by the auditors. When they come out to audit your organization, they're actually using GAGAS. And then also within that, there's a governmental accounting office, which handles both GAGAS and also some of the other documents that we have, the Green Book in that situation. We'll also have a little bit about the Institute of Internal Auditors and then their International Professional Practice Framework. So what do we mean by Green Book, Yellow Book, and Red Book? Well, Green Book is a standard that all grants should be handling in that situation. So it's a standard of internal control. We should follow the Green Book. And when we say should follow it, you should use kind of that, the Green Book as best practice. You don't have to follow every single part of the component of Green Book, but you should use that as your best practice when you're putting together your internal control. Yellow Book is for the auditors, the CPAs and everything, that they use all of the guidance of the Yellow Book to do your single audits at that point. Red Book is for the internal auditors and how they are described to do their engagement. Now, in Red Book, you would see that for internal auditors, for let's say governmental units like agencies, counties, groups like that, but you'd also see auditors, internal auditors in government, or also with the private sector where major corporations will have things. I know that when I was studying for the accounting, we had good friends that were working for different corporations like Exxon, and their internal auditors were using that guidance to go out to the different locations throughout the world doing internal audits for that organization. So what do we mean by defining internal control? Internal control is something that we provide reasonable assurance that the objectives of the organization is achieved. From there, we talk about reasonable assurance. Some people may confuse that with absolute assurance, which you really can't get to that position of providing absolute assurance. But we do provide reasonable assurance that the objectives are made. How are they made? They're done through the oversight body, which could be your board of directors, management, which is your executive directors, both financially and programmatically, and then other personnel that are involved in maintaining the internal control process. When we talk about systems of internal control, this is more primarily for federal grants, where you're looking again for reasonable assurance that the objectives are made, but what are the kind of objectives that would be made in that situation, which would be following the grant's compliance, which we would talk about federal statutes like the 2 CFR, the old OMB circulars would be part of those statutes. Regulations could be even in the state like Texas administration codes or regulations that are from the federal agency that actually has oversight of the grant itself, and then down to your terms and conditions of the federal award, which the federal agency will provide when they give you the award, or if they're passing it down to the state agency that does the pass-through, they would provide terms and conditions for your federal award. For right now, does anybody have any questions on what we've kind of started at this point on internal control?
Hi, everybody. If you want to take a moment and use the chat box, I'm also going to unmute all attendees. Maybe. There we go. All right. So everyone's unmuted at the moment. If you have a question and you want to chime in, please feel free to do so.
We'll also have at the end time for questions if you've thought about something and then decide, oh, I'd like to ask that question. We also have that in the back end to do. Now, internal control cycle is throughout the whole cycle of the organization. And when you're talking about the cycle of the organization, you're looking at your planning process, your budgeting process, your management. Management in this case would mean throughout the whole year that you're managing that grant or the operations of your organization. So that's a continuum of information that you're working through. And then naturally how your accounting process, which for internal controls, there is the financial internal control cycle, which is basically your policies and procedures that you would use for your accounting. We'd also come back with your monitoring as an organization. How do you make sure that whatever you're doing for your internal controls are actually being implemented, and are they effective? And then that's part of the reporting part, is that once you look at your process, you report back to your organization on whether they're effective or efficient in that process, and looking at any modifications that you may do, because what you planned at the beginning of the year and the changes that may happen in your organization. Let's say you increase with a new grant or a whole new department, you may have to change some of your policies and procedures. So in the reporting process, you will report, here's some of the things that we may need to change as we go along. Internal control is used to kind of support the effectiveness and the integrity of your process. So when you start your process, let's say for your accounting process, is it effective? Does the books have the integrity that they have, that you can follow through to the beginning and see what your original invoice or whatever was used as your supporting document? Is everything set that whole process has some integrity in the process? And then providing feedback to management throughout the process. When we look at internal control, we're looking at controlling the risk of noncompliance, or as we call it, mitigating risk. And how do you mitigate that risk? We look at the appropriate balance between controls and the risk of the grant award and programs and operations, which means that depending on how complex the grant is or the operations of your organization to apply to those grants, then you need to kind of look at the balancing act that you would have to make sure that you try to mitigate as much as you can, so that when you do get audited, you don't have the findings. Now, one of the things that some people have is that they think about, okay, I need to mitigate risk. And the thought is to make sure that do that balancing act, that if you put too many controls in there, you may become efficient or ineffective. In that situation, you may bog down the system. It may cost you more for what you're doing in that situation of controlling that risk. So you want to kind of ensure that proper balance of control with your awards so that you can streamline your process but still mitigate your risk of non-compliance. When we look at that part, you should look about the cost benefit. They say cost versus benefit, but most people say cost benefit in the situation that does the cost of your control exceed the benefit that you have for those controls. If it outweighs that, then you may want to look at things a little bit differently. If they do exceed the benefit, then you may want to look at the quantitative approach. For each new control that you put in, does it actually significantly help your internal control or in risk of non-compliance, that you can mitigate that in one sense. You can look at that process and say, well, if I add this extra control, is it really giving me what I need in that situation? Or is that just more kind of bogging the system down? Now, quantitative factors could be that you may add more and more policies and procedures, which may mean that people have to go back and review it a little bit closer, which may mean you may need to add more personnel in that situation. So you look at those quantitative factors and see and get that balancing when you talk about internal control. That's one area that I think a lot of people, when you start out with internal control, may tend to go a little bit too much to one side, or not enough controls. That's a good balancing act that we should look at. Internal control started out in the old circulars under the audit circular, so A133. And in that fact, it typically was that the auditors would go back and kind of make sure that your internal controls were set. And they would primarily do that with their policies and procedures, primarily your financial policies and procedures. And that's where the 1B started. Now with the 2 CFR, internal controls have actually been moved from that audit circular, which is now subpart F, the audit part, and it's been moved up into part 203.303 for internal controls. And when you talk about 200.303, you were now talking about post-award. So it's actually increased its significance on internal controls so that it really puts a factor of what are your standards for internal control, both financially and programmatically. I've put together the next 3 slides are the exact guidance that you would have, the citation, as you would say, for internal controls. And the first thing that we need to know about internal control from 303 is that, we must establish and maintain an effective internal control. So that's a must. When you talk about that part, if you don't have internal controls, that's a true audit finding. That's real tough in your process, and it can cause a lot of question costs at that same time. So in this situation with the circular guidance and the citation, that's a must. And we have to develop some sort of internal controls. Now, how do we develop those internal controls to assure that we're in compliance with the federal statutes? We would go down to the other part in this section that says that these internal controls should be in compliance with the guidance standards of internal control. That's the document, and that's the document is normally termed as the Green Book. And that gives you the guidance on how to provide internal control within your organization so that you're in compliance with all the federal guidelines, statutes, and other things. Part of that document, the Green Book, has the components of COSO, which is your controlled self-assessment that's in there. It's by the Committee of Sponsored Organizations. And it's used for both corporate and for governmental, but in this case, the governmental section brought it across and put it in as part of the internal control for government. As you can see with the internal control for the government, we need to comply with all federal statutes, regulations, terms and conditions. We also need to look and evaluate and monitor if we're in compliance with that, and then develop how do we ensure that if things are not in compliance, how do we quickly work through to get them into compliance. So still within that citation is taking the prompt action for instances of non-compliance. That we saw something that was out of compliance with your policies and procedures, or that you're doing something that could cause an audit finding. You've done your own self-assessment, you're monitoring, and you see now that you have an instance that could cause you trouble. You promptly take care of it. One of the things that you do is you can do that yourself, or when it comes down to an audit where the audit findings come about, then you have approximately 60 to 90 days to provide a corrective action plan. Depending on the organization that's auditing you, you may even have shorter time frames, like 10 days to 30 days to provide a response on your corrective action plan. And the last thing that you need to do with the internal controls is to safeguard your personal identifiable information. So all your IT information, your Social Security numbers, anything that is very confidential, you need to ensure that you have good safeguards for internal control, that we're taking care of those issues. Again, we can stop right there before we start the next section. And if anybody has any questions, we can talk about any part of that section.
Hi, everybody. You're currently unmuted. If you have a question, you want to pipe in, now's a good time to do so. All right, Mark, we don't have any questions in the chat box either.
Okay, great. Well, let's start with the Green Book. And part of the Green Book talks about the COSO document that works on internal control. So helpful for you is to look at the cube that COSO uses for internal control that's now been adopted by the federal government at the same time. On the top of the cube, you have your objectives for internal control, and there's 3 objectives: your operations, financial reporting, and compliance. Those intertwine with your 5 components of internal control, which is on the side of which is control of environment, risk assessment, controlled activities, information and communication, and monitoring. Those are parts that are interwoven when you're working on internal control. Do those components actually have part of the process of your operations, financial reporting, and compliance? Those work all hand in hand. And then, since this is a COSO model, which is more in a for-profit corporation, you can see on the other side in the white area the entity level for your organization. So in this case, it's the entity level, divisions, business units, subsidiaries. This part you can correspond to kind of a nonprofit area where it's your organization. It might be your departments that are in here, depending on how many grants or departments you have within your organization. Your business unit, and actually anything that you might even have outlets that you're working with that are units outside of the main organization that provides services. So these are the parts that we need to look at as we go through internal control by Green Book standards. The categories of objectives is to how to meet your objectives for the organization. And the three components for those objectives are operation, reporting, and compliance. So in operation, it's how you run the operations to be effective and efficient in your organization. Your reporting should be reporting for external and internal use. Naturally, external use would be to your funding agencies, organizations, your maybe even stakeholders in that situation. Internal would be for your management, direct management, to understand what are we doing and how are we working in that sense. And then the compliance part is the compliance that are applicable to all laws, rules, regulations that your grant award would have. So these are the three guiding principles for your objectives to internal control. As you can see in this chart, that first there's the components of internal control, the 5 components again: controlled environment, risk assessment, controlled activities, information and communications, and monitoring. But as you can see on the table over here, each one of those have a component of operations, reporting, and compliance. Naturally, that how do you report on the control environment? Do you provide an external document to throughout your organization? How do you set up that part, or how are you actually operating to ensure that your control environment is strong in that situation? So it's all pretty well interwoven in the Green Book process. Operations. Basically, with operations, you're looking to make sure that the operations are effective in the process and that they're efficient, so that you don't have as much waste of your resources. This part could be, how you set up your operations. Policies and procedures would be one thing, so that if you have redundant processes, that's okay if you can document why you may want a redundant process to control something that you may not have enough staff to control that. So you use a redundant process, but it can be still effective even if that's a process that you use. But you do balance that with efficiency at the same time. But that's what operations does for you. You just want to make sure that you're efficient and that everything's effective. On reporting, you want to be able to report externally both on your financial and non-financial objectives. Now in financial, there's one component that's a little bit different from the non-financial, and that's with professional standards. Now in that situation, when it talks about with professional standards for financial, you'll be talking about a GAAP, generally accepted accounting principles, or even auditing standards, or how do you set up your financial report, your balance sheet, your income statement. Are those in the professional standards in that situation? External would be using the appropriate standards and applicable laws for outside stakeholders, and also with your awarding agency that you have. Reliability within reporting on internally would be to see if you're gathering the information correctly and that it supports the decision that your organization has made in the performance of your operation. So this would be a component that could be split between two things. One could be your monitoring process, where you actually monitor to see that what you're put out as either a policy or a procedure or some sort of component of internal control is actually working and you're seeing it happening. And then you will use it again in reporting process when you report back that you've actually monitored, you reviewed, either everything's okay or that we need to make some changes. Now changes could be made just because there's a change in the structure of the organization, or the change could be made that we're not following our policies and procedures, or that control environment in that situation the way we thought we were doing. When we get to compliance for laws, regulations, we're talking about in the federal grant award that this part of compliance is kind of set up a lot for governmental sectors, but it's also for nonprofits, to make sure that you're in compliance with the applicable laws and regulations that are very significant for the organization, to ensure that they're providing the work that they're required to do and be in compliance with all the standards that they need to do for that grant. We look at that and we prescribe for the structure and method of achieving those objectives. So we're looking at the compliance factors and making sure that the performance are actually being achieved. How do we do that? Well, one of the things with compliance, we need to look at how do we design our compliance, which would be looking at policies and procedures. How do we do that? Looking at the planning process, looking at the number of factors that you have. Let's say financially, you may have only, for some small program, 1 or 2 grants. Well, that your design will be a little bit different than, let's say, an organization has multiple grants of, let's say, 5 to 10, or have millions of dollars in grants. You need to look at how to design the compliance for all those kind of factors, and then how to implement your compliance in that situation, which is usually implementing your policies and procedures, and then operating the organization so that it achieves its goal objectively.
Hi, Mark.
Yes.
We have a question in the chat box.
Good.
This is from Kathy. We currently don't have an official IC document. We have business operation policies that address some components, and we provide the auditors with a process memo, which describes the process of handling money, etc. Will the CFR 200 require a more formal process of documentation of policies and procedures? That's a good question.
It's a very good question. I would think that you may want to have within your compliance document that you're working with, that you put some sort of reference that your policies and procedures are part of your internal control for compliance in that situation, so that you're kind of documenting what you already have in that situation. Your policies and procedures are your actual supporting documentation of internal control in that direction. You could have a paragraph above that that kind of pulls it all in if you like. I don't think you truly need to have one whole document that's kind of like a document that has your internal controls and everything else that are put into it. But you could make a statement in your policies and procedures, or before you do your federal or your financial policies and procedures, you may actually put a paragraph that talks about how you're using 2 CFR to control the process, and here's your documentation, your policies and procedures. Hopefully that helps you. Kathy, do you have any other kind of question with that?
And Kathy, I can unmute you just to see if that answered your question. Oh, Kathy's not connected via the phone, so she's just on the chat box. Yeah.
Okay, not a problem.
No problem.
If you can always contact me, and we can talk about that a little bit more if you would like. And if we do have that kind of question that we need to establish a little bit further for you, I can always then set it up as a part of a Q&A for everybody else to know at the same time.
Yeah,
but hopefully that covers your thought at that time.
Yeah, and I'm sure that other organizations might have that similar process, that they have a process memo of some sort, and wondering if that's enough of a formal process and documentation. I'm sure that's a pretty common question.
Yeah, it's well thought out, because I think in that situation, I've seen some policies and procedures, and I know that the organization that Kathy works with has some real solid policies and procedures. So I think it's good that you add that component in, but you don't have to really make it a very elaborate in that situation. Okay. So, do we have any other questions? This is a good time to kind of stop for a second and ask any other questions before we go on.
Sure. I don't have any other questions in the chat box at this time.
Okay. Well, we can catch it in a little bit.
Yes.
Now, when we're talking about components of internal control, there's your 5 components that you need to establish internal control. They're, again, control environment, risk assessment, controlled activities, information and communication, and monitoring. These are your 5 components that really strengthen your internal controls. And what we have on this table is the different principles that would be used within each component. So as you can see, for control environment, there's 5 principles that you could use. Again, this is out of Green Book, which is, again, a should. Do you have to use all 5 principles? Well, it's best practices to do that. It's also good to know what the principles are. In a lot of cases, some of those principles can be combined into one activity or one control at the same time. So this is what I was trying to provide for you, that there's actually 17 principles in the Green Book for control components, internal control components. So we'll go through some of that. Most of this we will talk about in part 2 of our internal control, but I just wanted to present this so that people will have information as we go further. So control environment, which has the 5 principles. The main thing about controlled environment is setting your environment in your organization. And what do we mean by that? You can see within a lot of organizations that if your control environment is not strong in that situation, which is, ethic-wise, or, looking at your process and other things, then everything else will be weak in that situation. So if you set up your environment and you don't control a safe work environment, then that might be a factor that will happen within the organization, that staff may think, oh, well, it's not that big of a deal here in this organization. So to me, the control environment's your real big process, and you need to have that with a positive attitude towards, internal control, but more the control environment for your organization. And that needs to really come from the top down in that situation. So, it describes, sets your structure of the quality of internal control. How do we do that in one sense? And, we define our objectives in the control environment, and how do we then control those with structures, which would be, in our control environment, we'll state that, let's say, the employee manual, that sets a kind of a control environment for the organization. These are the things you should and should not do. And you can see that organizations that don't have this type of emphasis on control environment tend to have problems throughout. Then when you go into risk assessment, you're looking at assessing risk in a lot of different ways. Part of it could be external, what kind of risk we have from your awarding agency. That would be a risk of noncompliance. What kind of risk do you have that are internally in that situation with the number of staffing. Sometimes just by the sizing of an organization can create risk. Sometimes it could be good in mitigating that you have, let's say, a full financial department that can do a lot of different things. You have payroll in one area, another group that does, the records for the general ledgers, other things like that, and you have enough people that can be specific in that area. That may be good in one sense, but it also could provide a risk that, well, maybe we're not talking well enough together that something falls through the cracks. So that's how you kind of assess some of those risks. You assess it for, both, like I said, your external factors of things that come towards the organization. So naturally, it'd be what your federal guidance would be. But also, you could look at that as your assessment. Let's say some new changes in the law, in that area that could cause problems. You need to assess that risk and see how you can mitigate it as quickly as possible. So that's a good portion of your internal control component. Control activities, here you're really talking about more policy and procedures. You look at control and activities, and there's 3 principles behind it. It looks at documenting and providing true guidance on what you want to do. When we look at controlled activities, you may actually look at other things that are kind of below that as a subsection, which may be compensating controls. So you have a control that's out there that says we are doing such and such with our time and effort, let's say. And part of that control environment is you got a policy that, the person signing it is ensuring that it's correct, and that there's oversight with the supervisor that's doing that part too. You may have a control that might be in there, compensating control. Let's say you're using more of a system for your timesheet. So it's an automated system. Well, your compensating control there might be a situation where you look through the process and make sure that whatever is being put in is actually following the process that it should be. So you might have a compensating control that actually goes in and looks to make sure that everything's heading correctly or is being dispersed to the right funding source and everything else. That would be another, as we call, compensating control. But that's part of your control activities, looking at those systems, internal control, and developing your activities from that. But a good portion of that's going to be, how do you follow your policies and procedures? And within that, how do you ensure that they're being followed and they're being effective? Information and communication. This is one of the areas where a lot of times we can set up great policies and procedures and other things, but then we don't provide the right communication and information to our staff to do what our policies and procedures. So you need to figure out what's best for your organization. Does that mean having a manual that everybody signs off on? And then do you have a system that maybe any updates that come up will either be by computer, and that you may have a situation where you send an email to let people know that there's been a change in one of the policies or procedures. How do you go about that? By communicating to make sure that everything is working correctly and that everybody's up to date with new policies and procedures or new systems that come up. So that's a key component, and there's 3 principles that are involved in that process for communication and information. And then monitoring. How do you go back and ensure that what you've set up as your internal control system is actually working well, and that there's no waste in going through there, that you've put so much controls in that you're actually bogging down the process. This is a good time where monitoring. You have somebody, a supervisor or somebody that goes through and ensures that the process is going correctly. Financially, you do that with your policy and procedures when you're looking at doing the general ledger. What do you have as a supporting documentation for that? Are you following through with the process that if you have something come in that needs to be inventoried before it goes to your organization, like computers, other things, what is your process? And do you have a way to go back and look at that and see if there's any changes that you may need to do, looking at the process? And a lot of that monitoring can come through when you're actually having changes in your environment or the new laws may change. Big example right there is going from the OMB circulars to now the 2 CFR. Did we monitor through the process to make sure that all of our policies and procedures now have the information about the 2 CFR instead of having the old OMB circular? So that's kind of the process. And then you take that and provide good information back to the organization of what you found in that situation. Part of that is looking at your corrective action plans. If you do see something that comes up, this is a good portion of the time. You can tell when you have good internal controls, when you're in your monitoring process, that something that goes wrong, which sometimes they will happen, you book a transaction incorrectly by accident, but you do have a process that within a timely period, you see that and you rebook the expenditure in the proper category. That would be part of what your monitoring process is. And it looks at that and ensures that your process, your internal control is doing very well. Do we have any questions at this time? In part 2, we'll go into much deeper into the control activities and all those processes, and we'll look through our components of internal control and then the actual parts that would be involved in that.
Mark, can you hear me?
Yes.
All right, we have a question from Kathy. Really good question. The workload of many nonprofit staff, as you know, is such that adding another layer of monitoring might cause additional wages to cover staff time. I wonder if there are allowable costs for an additional staff person.
You could. I know that I think we actually have in our agency now somebody that's kind of like a compliance person, and they go back through and look at our compliance area. Some of it can just actually be built into your process as your policy and procedures. You may have just the supervisor as they're reviewing the process can just make quick comments or notes, and that might be part of your documentation for monitoring in that situation. So there's different ways to do that. You could actually have new staffing that would do that, and they might be able to do something that might be kind of a combination. They do that part and they do something else, which may be like in the communication section or something else, that as they monitor it, how do they communicate and how do they get things out to first management that needs to know about it. But then when management makes a decision on any changes, how do the changes come about? So that may be one way to add another person into it, is by looking at that, maybe not just as one sole staffing position for that, but using it in kind of an integrated process.
And part of that question, Mark, is, in your experience with finance departments and people that might have one staff person playing a role in finance, but then there might be also a compliance person or some, everybody uses different titles sometimes for
Right.
exact things. Have you seen a common theme in regards to how people are funding those positions? Are they doing that in across all of their grants? They're writing a percentage of those people's salaries administratively in a lot of grants, or are they using a particular funding source? Because I think that was also a piece of that question. Is there, how are people building their capacity in their finance department, really?
Right. Well, there's a couple of ways to do that. I've seen it where they're built into each of the grant. A small component of their financial staff is built in for, let's say, 5% or 10%, and depending on the number of grants that they have, that's how you might do that for a particular position in one sense. The other way, which would be really hard in that direction, is to actually do a cost allocation plan where you would need to have a very big financial department that is then structured to go through a pretty huge organization, and then charge that area through that process. But that's typically, you're talking about primarily more counties, state agencies, other groups like that. Nonprofits don't typically do that, but I think you can do it through, putting a component of that into the grant itself. So that's typically how I've seen it. Now you can have somebody that might be kind of split between two things, but they're also split between a lot of different grants at the same point.
Yeah, I mean, I think that's the fortunate, unfortunate thing. I think that grantors want agencies to build capacity, to have good financial accountability. But there's usually not a lot of wiggle room on those grant budgets to add in, a whole additional staff person on an administrative line. So I think, just like Mark is saying, I most commonly, when I'm in contact with folks, usually it's an allocation among every grant that they have, some sort of percentage of it, that they can kind of stack in there. And that's hard if you're at an organizational level that you're relying on grant funding primarily, and you don't have that many grants to pull allocation for another financial staff person. So, but I do think too that there's a case to be made on the fundraising side or the foundation side of seeking private funding, to talk about how you're building the capacity of your nonprofit in these areas. And one of that, if you were focused on building infrastructure, and I do think that foundations are interested in that work because they want nonprofit, when they invest in your nonprofit, they want that investment to last. Even if it's $1,000 or $5,000 or $50,000, foundations are very invested in that. So I think if there are conversations that you can have with private funders about wanting to build the infrastructure of your agency, in one way is about capacity building around financial accountability and practice and maybe grant compliance, that might be a creative way to kind of pitch something else. And a lot of times when we're seeking funding, it's hard to seek funding that's not supporting direct services and programs, right? I mean, because that's our mission, that's our vision. We want to provide and support services to survivors, and we want, if we have a shelter, we want it to stay operational, and if we have counseling services, we want it to stay operational, and if we have an advocacy response to the hospital, we want to fund those. But we can't do any of that great work without that infrastructure around financial, A, managing the finances, and B, managing them in a way that the agency can continue to grow and thrive and provide quality services. So, I think we sometimes miss that mark in fundraising to talk about infrastructure and overhead. But there is a way to do it, but it has to be part of your development plan.
Right. I think that's one area that's really kind of hard to get funders to really look at the significance in that situation. But, it is a big portion of making sure you're in compliance and that you don't have to pay money back. One of the things I know we're looking at, and probably we are getting close to our own grant cycle for the capacity grant, and then we'll be getting another one. But we're looking at some ideas to help all the programs with looking at funding, in the sense of there's TechSoup that has a database that goes out there that will look at solicitations that may be out there for corporate or foundations, private foundations. There's another one, Thompson's, that's doing something that we may be able to work together and pool our resources so that we can make that a much more cost effective, to be able to get those type of databases that are out there that can help you search for private corporations, private foundations, other groups that do provide contributions or grants.
Yeah, absolutely. And I think, this conversation about, providing support about financial processes, we have to fund those as well. And so, this question kind of brings up a good thought, which is, as TAASA, we'll pursue either presenting on in the future, or seeking a really solid consultant or expert to maybe do a webinar on overhead costs, because understanding what that is. And then, but beyond that, I think there is a myth in the nonprofit world that we can't ask funders to about overhead costs, and I know that for government grants that absolutely sometimes is not an option, but I do think there are these other options with private funding, and and I think we can put some information out there that might help in that direction. So thank you very much for your question, because I think it's got my ideas jumping in my head right now about how we can kind of further support the organizations that we're in contact with around this funding issue of how do we fund overhead, how do we fund capacity building on administrative infrastructure, those types of things.
Were there any other questions that we can answer at this time? If not, you can always use my contact information to get in touch with me. And if we have questions like that, then I will answer them, but I'll also try to compile them into an FAQ for everyone.
Here's another great question.
Okay.
So policies and procedures around an accounting process. So timing of billing, this issue of when something's billed, say, registering for a conference or training that happens in May, and people are registering, for example, the TAASA conference, people might have done the early bird registration in February and March or January. However, an organization may, the conference doesn't happen yet, but we paid an AP run in April. So should we include the expenditures in March or April, the timing procedures? I think, that's a very concrete example, but I think that timing procedures crosses over on a lot of different things, right? Training being one of them for sure. When we register for a training is not the same time that it happens.
Right. And my guidance typically on that, and it's kind of strange because it depends on the agency that the grant is being awarded from, because some are micromanaging and others, will not be as particular in that situation. But under GAAP, generally accepted accounting principles, if you've made an obligation by registering and you're obligated to pay, then the expenditure can happen at the time of obligation. Now, which means that it may be March when you do that and you've paid for that. That's when you can actually charge that, even though the conference isn't until April. Now, typically a lot of organizations or funders, if it's within a month's period of time, that's not a big issue, but we do have at least one agency that kind of micromanages, and you may have a little bit of an issue there. Now, naturally, the travel itself has to be coordinated with at the time that you travel. So the registration may be expended and charged on a different month than the actual travel. So when you go and either fly in or your hotel and everything else, now that actually has to be at the time of the service.
Mm-hmm. Mm-hmm. Yeah, and I think, the person that asked this question, I think follow up with Mark, because it sounds like maybe you're getting a response from a funder that's questioning the process or the timing of the event that you paid for, that type of thing. But yeah, I mean, TAASA is a great example. We're primarily grant funded, and as you can tell, all of our staff travel quite a bit if they're in the training department, especially. And sometimes that, the event happens and they reconcile their expenses at the end of the month. And, so there, I think there's justifications in the processes about, like what Mark is saying, the obligation. When did the obligation occur? And so I think this is great follow-up. I would call Mark or email so that if there's a process that you need to lay out a little bit more clearly for a funder on this issue, I think that it's a really great technical assistance thing that we can help with.
Yeah, we can work with the funder that you're having a question about to just kind of work through the process. I know we had that issue with per diem at one time, where one funder kept on looking at it and they were saying it's only $36 per day. And through probably a 2 months process, we were able to work out the issue and get it to where it truly should have been at the time. So that's some of the things we can do as TAASA. Either naturally Christina or myself can help with advocating for y'all.
Yeah, absolutely. Mark, do you have another slide with your contact information?
Yeah, it's at the very beginning.
Oh, okay.
And
I just want to flash that up on the screen really quickly. But everybody has your contact information and materials. Right. So don't hesitate to follow up with Mark by any means.
On page 1, it will show my email, which is mhernandez@taasa.org. And then my direct line is 737-333-9941. But you can see that on my part. And again, since we're getting so close to the TAASA conference, you can always come by and visit with me. Deborah Butts from TCFE will also be there, so we can both help you with any of the financial questions or grant compliance questions.
And like all of you, we also are try to stay in compliance with our grant directives, and so we also have a post-test that Mark mentioned at the beginning. You got a link to the pre-test that you're in your registration email. Hopefully you had a chance to do that. It's okay if you can't find it, dig around for it if you can, but please take a moment when you exit the webinar and you'll get it in a follow-up email about filling out an evaluation. The link will be embedded in there. So if you'll just take a moment to do that, that helps us stay accountable. And we receive your feedback. It helps guide future training topics and things that we should be doing better. So please don't hesitate to take a moment to give us that feedback. And we really appreciate being here with you today. And as a reminder, part 2 is, Mark, what's the date for part 2 again?
That's April 24th, and it's in the afternoon. I'll be sending out another financial listserv about that with the link so that everybody will be ready for part 2.
Okay, great. All right, thank you, everyone. Thank you, Mark.
Thank you. Take care.